Welcome back, everybody. We have a special guest with us for the next half hour. Let's welcome billionaire investor and philanthropist David Rubenstein. He is Carlyle Group's co-founder and co-chairman, and he has a new book out next month. It's called How to Invest: Masters on the Craft. He interviewed lots of Wall Street luminaries for the book, including names we know pretty well around here: Larry Fink, Ron Barron, Mary Erdos, just to name a few. We've got Ray Dalio, Stan Druckenmiller, John Rogers. These are all people we know pretty well, too. But, David, I think this is particularly interesting to have you speaking to these investors because you do this for a living and you do it pretty well.
Well, thank you very much. I had a chance to meet with these people over the course of the last year or so, and some of the interviews had to be done virtually because of COVID. And I know a lot of them, and I've done some work with them, but I had the chance to go back and talk about their backgrounds with them, what made them tick, and try to figure out what it is that makes somebody a great investor versus an average investor.
What'd you find?
Well, they are generally from nice families. They are not from the poverty-stricken families. They tend to not be Horatio Alger stories. They tend to come from middle-class families, good in math, pretty good students, obviously like to read, like to be in control, like to make the final decision, and they go against conventional wisdom. They're really willing to go against conventional wisdom, which is what makes them great, because if you went with conventional wisdom, you'd presumably be like everybody else.
So going against conventional wisdom, what are some examples of that? Maybe where they zigged, where everybody else sagged, that put them in the pole position?
Well, John Paulson made a famous trade where he kind of went against what a lot of people thought was possible to do with the big mortgage trade, a short, and he made roughly $20 billion on that. That's unusual. Mike Novogratz got into crypto very early when people thought that was terrible. He made a lot of money in that. It's obviously come down, but he still made a lot of money and still holds a lot of crypto. So those are good examples of people going against conventional wisdom.
What's an example where you went against conventional wisdom and it served you well?
Well, I started a private equity firm in Washington, D.C. People said you can't start a private equity firm in Washington because Washington is a government city. And I made it work with the help of a lot of others.
What's the secret if you're investing in Washington? You know, if you're not following the lobbyist, what does make the difference? Why is it good to be there?
Well, in Washington, because we started in Washington, we were able to say correctly, I think we understand companies heavily affected by government. So aerospace defense companies or telecommunications companies, maybe we had a better understanding of those than people maybe in New York did. At least that's what we said, and I think it was probably true.
What about habits of successful investors? Anything all of these people have in common?
Yes, they're workaholics. There's nobody 9 to 5 just kind of coming in late, leaving early. No, these are workaholics. And for these people, investing is not work, it's pleasure. These people love what they're doing, and if they weren't making the enormous amounts of money that they're making, they'd still do it. This is not something that they really, at this point, need the money for. When you're worth $10 billion or $20 billion, you don't need to go in and work this hard, but they do because they love it.
You mentioned going against the grain, going against conventional wisdom. What do you think the conventional wisdom is today in this economic backdrop, and what would going against the grain be in your view?
Well, the conventional wisdom today, and remember, John Kenneth Galbraith famously once said, conventional wisdom is almost always wrong. But the conventional wisdom today is that we're probably teetering near a recession. We might go into one, we might not. The Fed will increase interest rates by another 150 to 200 basis points between now and the end of the year. And that probably you should be nervous about the equity upside. There's not likely to be a lot of equity upside in technology stocks or crypto or things like that. That would be the conventional wisdom. So if you're now bullish on crypto or you're bullish on technology, now's the time to get in, and maybe a year from now you'll look very smart.
Are you bullish on crypto or technology?
I am bullish in the sense that I think the greatest fortunes are made when people go against conventional wisdom. Now, who knows where crypto is going to be, but right now crypto's been beaten down dramatically. Probably if you go into this, and not just crypto itself, but I've invested personally in the companies that surround the industry, not just the cryptocurrencies themselves, but companies that service the industry.
You mean like the Coinbases?
Those type of companies. They have not actually done that well lately. They've been hurt by crypto decline, but in time, I think the industry is not going away. Members of Congress are not going to push to regulate this industry unduly, in my view. The crypto constituency is very strong in Congress. They tend to be very Republican, very libertarian, and very willing to spend money on lobbying. I interviewed somebody the other day, Sam Bankman-Fried, who you probably have interviewed as well, And, he spends a fair amount of time in Washington, puts a fair amount of money into political contributions. And I just think the industry is not likely to be soft in terms of its dealing with members of Congress. They're going to be fairly aggressive. And I think members of Congress are probably going to react by not pushing the regulators to do more than they're already doing.
Is that the secret to investing in Washington, though, just following the lobbying dollars, following where, I mean, is cash king in a situation where you're aggressive as an industry,
that's not the
you push
only
your
thing.
views?
Take aerospace defense. The defense budget, people have been saying for the last 25 or 30 years, is too high, but it keeps going up, and probably it's a pretty good bet that it's probably going to keep going up.